You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, you're probably thinking war. We got crazy stuff going on all over the globe. Precious metals prices going higher, and you got some extra money, but you're probably very scared and you don't know what to do with it. Well, my next guest talked to, the last time we talked was almost a year ago. And, well, I'm going to start out asking him the same question that I asked him then. His name is Naresh Vissa. And Naresh, great to have you back. So a year ago, I asked you the question, where do you put your money? What was your answer then?
Well, let's add some more context to that question. First off, thanks for having me back. It's always a pleasure to be on. It was around June or July of 2021 last year. We finished the interview and you said, where do investors put their money? And there are three areas that I kind of intertwine. I go in and out of, I rotate, and that's stocks, real estate, crypto. Stocks, real estate, crypto. Been doing that since about 2013. And I said last time I was on, Bitcoin was at about 33,000. And I said, hey, once Bitcoin dips below $30,000, it's time to go all in, because I'm very pro Bitcoin, and we can talk about those reasons later if you're interested. And so, despite Bitcoin has been in a decline. It's been in a quote unquote bear market. It reached all-time highs of about $68,000 in November of 2021. Now it's sitting around $43,000. But hey, you're still up about 40% if you got in at Bitcoin 30,000. Today, as we speak, I think there are a lot of great value stocks. And I also think that there are some very good opportunities in Bitcoin because of its volatility. I think over the long haul, Bitcoin is not a get-rich-quick scheme. You should not be treating it like that. You should be treating it like digital gold, like something that is going to appreciate over time. So your time horizon needs to be years and years and years, not a couple of hours. So right now, today, there are some stocks that I would recommend. I'll share some names, for example, Amazon, Facebook, PPG is another good one. Starbucks, it's another great one. And then as far as crypto goes, we know that there is going to be a 10-15% decline, because that's how crypto works. And the next decline that there is, where Bitcoin dips below $37,000, I think is a really, really good time to go essentially all in.
Mm-hmm. And so what is it you like about crypto?
Well, a couple of things. Number one is decentralization. I don't know if you've done a few episodes on decentralized finance, or as they call it now, DeFi, but it's this idea. It's this idea of creating a new independent financial or banking system that I absolutely love about it. And now you have countries like El Salvador, Ukraine before this war, which we'll talk a little bit about later. Ukraine was considering adopting Bitcoin as a legal tender, just like El Salvador has done. I think Guatemala, a few other South American nations will follow that lead. So that's the biggest plus of cryptocurrency. It's the decentralization. It's finite. It's not infinite, like how the U.S. government, or really the global governments, are just printing away. You can't do that with Bitcoin. The ease, the digitization. There are just so many pros, so many pluses, and from a lot of people listening are like, okay, look, I don't care about that. I just want to buy Bitcoin at, let's say, 40,000 and for it to go up to 400,000, which I do think it will eventually do later this decade. Wall Street is now heavily invested in Bitcoin, in crypto, not just Bitcoin, but in crypto, even in decentralized finance, surprisingly, which hurts Wall Street. They're heavily invested, not just financially, but they've put in a lot of manpower. They've hired tech people, finance people, bankers to enter into the space and grow it. And that's the biggest plus. I think Wall Street is just waiting. They're just sitting until the right opportunity to pour just billions and billions of dollars into the crypto space. So that's another reason why I'm very, very bullish on crypto right now.
Mm-hmm. All right. Well, I see your point. I totally understand it, and in light of how it's behaved in the past, you might very well be correct. But I don't know if you heard today, but Yellen, Secretary of Treasury, put out a tweet saying they were, and then we just had Biden's executive order saying that it's all going to be regulated. Is that a good thing or a bad thing?
I think that's absolutely a good thing. So number one is Bitcoin is difficult to regulate. Most people, they're just looking to make a quick buck through a Coinbase or through a Robinhood, right? That's essentially how most people are utilizing crypto. Those organizations absolutely are going to be regulated, and it's a good thing that they're regulated. But the true value behind crypto is that it cannot be regulated, and so that's obviously something that the government doesn't want. You can get what's called a cold storage wallet, and the government's going to have no idea that you even have it, and you can do all sorts of things to as more countries like El Salvador legalize Bitcoin as tender. You could do all sorts of things like buying real estate in El Salvador using crypto and going in and out of all the many different cryptocurrencies. I mean, there are now like thousands, if not tens of thousands of different cryptocurrencies out there. So I think regulation, I think the more governments accept, hey, this crypto thing is here to stay. It's not some fad, because that's really what it was for the first 10 years or so of its existence. The politicians didn't understand it. The PhD economists didn't understand it. They didn't think it would become so big. And now they're forced to accept it. They're forced to accept the situation. And they are creating regulation on those companies that I mentioned, like the Coinbases, like the Robinhoods. Completely get it. I think this is great. I think it's going to cut down on the scams, cut down on the hacks. It's kind of like the 2008 financial crisis in the sense that I thought the regulation post-financial crisis was a good thing to build trust in the banking sector and to hold Wall Street somewhat accountable.
Mm-hmm. Yeah, well, regulation's good, but it all depends. We know what happens with regulation over time, don't we?
We do. And look, I do predict at some point there will be a bubble that will burst in crypto. We're not there yet because we're not in a situation where everyone and their mom is investing in crypto. I read a statistic that still less than 10% of people above the age of 30 in the United States own a cryptocurrency. So it's not like owning a house, right? Like people above the age of 30 back in 2005, 2006, that statistic was a lot higher. So I don't think we're in bubble territory yet. But I do think maybe within the next 15 years, we will see a similar event that's going to cleanse the crypto system, just like the real estate sector in 2007, 2008.
Yeah. All right. Well, you might very well be right. So stocks have really taken a beating recently. What's your take there? Why would anybody be looking to get back in?
Well, a couple of things. If you look throughout history, the stock market goes up over time. What we've seen really since 2016, we've seen just a huge jump in the stock market. The Dow was around 16,000 in 2016, 16,000. And by the end of 2021, the Dow had reached close to about 36,000. So it was up over 100%. S&P same, over 100% in a matter of 5 years. That is incredible. If you just look throughout history, that is such a wide run up, such a large run up. Mm-hmm. And so I'm still bullish on stocks. I don't think that we're going to see that type of run up moving forward. Although I do think it's the first time. Usually I'm apolitical when it comes to stocks, but what I'm learning since 2008 is politics absolutely matter in when it comes to inflation, when it comes to deflation, when it comes to stocks. And the global politics, the internal politics that we're seeing has certainly led to this run up. And I think in 2024, if the same political party is running all chambers of the government and they're on the same page, unlike the current political party that is not on the same page, if they're on the same page, then I think we're going to see a pretty big run up. That's not why I'm bullish on stocks right now. I'm bullish on stocks, not necessarily bullish on stocks, but I think now is a good time to get in because of the decline we've seen. The NASDAQ is down around 15%. The Dow and the S&P, if you take away today's big run up, the Dow and the S&P aren't too far behind. So there are great value plays with companies like I brought up earlier. Look, those companies aren't going anywhere. 30 years from now, when you invest in a stock, you want to think, okay, is this company going to be around 30 years from now when I'm in retirement? And if the answer is yes, then that's a good company to invest in. So when you see a big decline like what we've seen since January of this year, it's a good time to pick up stocks at a good value. And one more thing is, when the market turns bearish or if the market is sideways or in a correction, just looking at history, it generally goes through, unless it's in a long-term recession, which I do not think we're in by any means. In fact, I'm very optimistic about the economy, about the job situation as the pandemic is essentially over and people have mentally moved on. 4 months is the limit at which a market moves sideways or is in decline. So it's really since January of this year when we started seeing these declines. So I expect the market to bounce back by April. I think the Russia-Ukraine situation, there's going to be much more clarity by the end of March. And April, I expect the market to start going up again, along with crypto as well, maybe even gold, silver, and a few other commodities.
Mm-hmm. All right. Well, hey, I'm not necessarily, I don't know.
Optimistic.
Yeah, well, it's just that there is a thing called the return to mean, and that markets tend to retract and head back to their historic averages. And we've had this long bull market since the last crash in 08 and 09. Actually, it started like in 11, this bull market. So it's very old of tooth. And this, we haven't fully corrected. I mean, how much has it really gone down over the past month, mostly on fears of
World War III, which I think are completely baseless. I'm not of the fear-mongering camp that we're going to see World War III. I think it's pretty clear what Russia wanted from the start, what their rules were, and Ukraine didn't play by their rules, and so this was expected, and that's why I think we're going to have a much quicker resolution than a World War III. I don't think, and we don't need to get into the politics of it, but I think these countries will figure things out on their own without the United States having to step in and play Big Brother. And so what does that mean for the market? Well, going back to your statement of reversion to the mean, remember in February, March, April, I brought up 4 months, generally 4 months, right? So February, March, April, May 2020, that's when we saw the pullback, the bear market due to COVID. And then now in 2022, we're seeing the pullback, the correction, the bear market due to this war. And what happened in 2020, the market rebounded sharply. In 2018, it was actually a down year. 2018 was a down year for stocks across the board. And what did we see in 2019? They rebounded sharply. So I do think this is going to be a pullback. It could even be a pullback sideways type of year. But if the market continues to pull back, don't be fearful. Don't sell. As a market is pulling back, you should be adding more, because the worst case scenario is that stocks rebound next year in 2023. So even if you get in this year in 2022, you write it out for 5-6 months. I think 2023 is going to be a really, really good year. But it's not going to be like I said, these 30% gains, 35% gains that we've been so used to seeing over the past couple of years.
Well, that's disappointing. So you mentioned the third leg of the stool, real estate. Real estate, by any measure, is in all likelihood in a bubble now. And is it time to buy or is it time to sell?
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
So in the case of real estate, it's definitely not time to sell. I think there's more room for real estate to go up. I don't see a crash in real estate prices by any means. The fundamentals are still very, very much there when it comes to real estate. There's still a labor shortage. There's still a major supply chain issue, and these issues are not going to be working themselves out anytime soon. So what does that mean for prices? If you currently own real estate, keep owning your real estate. And rents are continuing to rise. So if you rent out your properties, you're going to be able to jack up rent. And those aren't going down anytime soon. In fact, I don't think they're ever going to go back down. But when it comes to the other side of the equation, is it a good time to buy? I think it is a good time to buy simply because of interest rates. If you are looking to get financing, you'd better do it sooner rather than later, because the governments have made up their minds that it is time to raise rates. It's been forever since we've seen double-digit interest rates or double-digit mortgage rates, and I do think we will reach 10%, 11% mortgage rates if you were to put 20% down on a home within the next 5 years or so. I think we will get up to that point. Already, we are seeing on investment properties mortgage rates above 6%. So that's quite a big hike that we've seen. So it is a good time to get in right now solely because of the interest rates. I don't expect the real estate market to crash. I hear a lot of people who don't understand history or just the fundamentals of recessions. They say, oh, there's going to be a big real estate crash simply because there's been such a big run up in price. Like what you said, a reversion to the mean. With stocks, at least. I don't see that with real estate, because the 2008-2009 financial crisis was a real estate crisis that was manufactured by Wall Street. Today, Wall Street is stronger than ever. They are the biggest landlord in the world. They are buying up properties, multifamily, mobile home parks, single-family neighborhoods in droves. And if Wall Street is setting whether you agree or not, if Wall Street is setting the base when it comes to the housing market, then there's a price floor that is going to be met, and so there's not going to be a crash. I think there will be a cooling as real estate or as interest rates go up, I do think the real estate market will cool, but that doesn't mean the values are going to go down significantly or even crash. So still a good time to buy real estate, definitely. Still, if you own real estate, keep owning it. Maybe think about some 1031 exchanging. I wouldn't say I'm bullish on real estate. I'm just very pro real estate right now.
Okay, I can buy that. I understand your rationale. It's always a bad time to buy because prices are always too high. And then, surprise, surprise, they get higher still. But on the other hand, Naresh, I mean, we've never seen real estate prices go as high and as fast as they have recently. Now, obviously, we've got this inflation thing. Is inflation over the long term a net positive for real estate, or what? Because eventually nobody's going to be able to afford their rent, right?
Well, that's how a market works, right? So if nobody's able to afford the rent, what happens to the rent? The rent goes down. And so what's happening, let's do a quick economic analysis. So there's a labor shortage. There aren't enough people to build real estate to keep up with the demand that there is for housing. And remember, the United States did lose, by the time it's all said and done, let's say 1 million people due to the pandemic or issues relating to the pandemic. But at the same time, the United States is importing well over that number when it comes to immigration, legal immigration, illegal immigration. Birth rates have gone down somewhat, but there are still babies being born. So the United States is still growing population-wise, whereas there aren't enough people to, or at least right now, we'll see how the economy plays out once people get back to work and I guess more illegals come in. But the idea here is, are we going to build more? Are we going to be able to build more? Right now, we're not able to build more. And so, as you know, when there's so many wealthy people who have money, who can pay cash for houses or who can afford a 100% hike in a mortgage payment from 2 years ago or from 3 years ago, what's going to happen? Well, the rich are going to continue to gobble up the homes. Wall Street's going to continue to gobble up the homes. And the people who can't afford it, they become renters. They're forced to rent, right? So now you have way more renters, and that's going to jack up the prices of the rental market. And to your question of, well, is it ever going to reach a point to where those people aren't even going to be able to afford rent? Well, that's when it does I don't think it will reach that point. I think people are going to be spending more of their income on rent as a result, which is unfortunate for many people, but that's just the reality of the situation. Instead of paying 20 to 25% of their income on rent, they're probably going to be spending 50 to 60% of their income on rent.
All right. Interesting times ahead for sure. We didn't even really get into inflation directly. Naresh, people want to find out more about you, connect with you on the web. How do you do that?
Yep, nareshvissa.com. That's NARESHVISSA, nareshvissa.com. And thank you so much for having me on the show, Kerry.
Always a pleasure. All right. If you've got a question for Naresh, just give us an email, kl@kerrylutz.com. Go over to the site, financialsurvivalnetwork.com. Sign up for your free newsletter. Now more than ever, you need to think out of the box because the box is getting smaller. Naresh, always a pleasure. Thanks so much for coming on.
Thank you, Kerry. All the best.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.